Good morning, everybody. It's Chris here from Serene Education with the four majors and that's update for the 23rd of May 2013. Very, very interesting day yesterday. We saw a lot of movement in the market, as per usual. A lot of fundamental news announcements out as well. That coincided. We saw a lot happening yesterday morning, Bank of Japan, and then yesterday afternoon with Bernanke and the FOMC meeting minutes. A lot of news, a lot of volatility. And if you look at the pairs that I'm going to be talking about this morning, euro against US dollar in particular, let's start with. Let's have a look at the daily. A nice bearish engulfing candle. And pretty much this coming at the underside of a price support and resistance fib retracement level here from our highs in January to our lows that we saw here through March. And we've seen a lot of negativity. The last arrow being red, candles are red. Everything's looking fantastic. We have a slight consolidation support where price is trading right now. In real time, we've had 1, 2, 3, 4, 5 consecutive days of support here, and today, this morning on the Asian session, very, very small trading range is that. So we're trading into a potential bottom here. We're not too far off from the price support and resistance level lows here at the 12,750 mark. RMO is below the zero line, MACD below the zero. Our indicator box here is showing majority negativity. We're seeing the RMO and the moving average here all helping together or confirming with each other. So the sentiment long term is still looking negative, and we should be looking for further shorting opportunities. So intraday, we'd like to see this current support level intraday over here being broken, and then we could see further movements to this prior support low here that we saw back in March of this year. One thing to remember, today is another day of a lot of news, and we have, for Europe in particular, we have all the flash service PMI results for the French, the Germans. Then we have the flash manufacturing PMI for the whole of Europe. Then we go into sterling. We have the second GDP quarter-on-quarter estimate figures, which is going to be very, very important for sterling. And then later this afternoon, we have a lot of news out for the US dollar. FOMC meeting, members speaking, unemployment claims, good one, flash manufacturing PMI results, home sales, and then later this evening we have the trades balance figures and the ECB President Draghi speaking. So a lot of news out today, guys. I had a lot of news. Okay, so be aware of it. We have to be well aware of what it's likely to do to price, to where we are right now, and what we're likely to see for the foreseeable future. So euro at the moment now, I'd like to get below the support level over here. You can see the MACD has been pulling back. RMO has gone flat, and we do need to see this intraday support over here being breached quite clearly. So very, very important. Wait for that to coincide with a nice bearish engulfing candle, then pull the trigger to that last low down the bottom here. Which we're looking at where price is trading right now to this level. You're looking at about 90 odd pips, so there's enough on the table. However, if we fail to see price breaking below this level over here, we could expect more buying sentiment to come on board, and if that's the case, then we should be targeting back up towards this 23.6 here, the fib retracement from those January highs to the low in March as our next potential target. On to sterling. Here again, like its European counterparts, a lot of negativity on the actual trade itself. 2 consecutive days of bearishness, and you can see where price is trading are likely to go to now, which is this prior support and resistance level low that we saw in March as well. So that's the low in March. That's potentially our next target. You can see the intermediate trend has been broken. Swing high, break lower, pull back, and then the continuation lower. This red line over here constitutes to my monthly fib retracement, 23.6 fib retracement level, and that's the 15300 mark, the major support and resistance level for this particular pair. We are trading below it, so that's a negative sign, and if so, we should be looking for negativity to unfold. You can see the RMO and the moving average, the institution moving average here, clearly working together as a team, and our R squared intraday is looking very positive as the negativity takes hold. So as it stands at the moment now, we should be looking for further sentiment to the downside. One thing we're going to have to watch today to give us an indication where price is likely to go to for this particular pair is the second estimate GDP quarter-on-quarter figures for sterling. We had some really bad retail figures out yesterday. Nothing really helped to stem the negativity on the UK market, and it'll be interesting to see what these GDP quarter-on-quarter figures are. They're expecting no change, a 0.3% from the previous figure. It'll be interesting to see if they actually can maintain that. So as it stands at the moment now, we should be looking for nothing more than potential shorting opportunities, with our long-term targets roughly around the price support and resistance level low down here, which is a good 200 pips away at the 1480 mark. Next up is US dollar Swiss franc. Here again, we had some very interesting news out yesterday for the US market. In terms, there were potential speculation that Bernanke and his sidemen were going to start easing on the quantitative easing package. So it'll be interesting to see how long or when it comes into effect. But it's also going to start reflecting on price action. We've seen the Dow Jones, the Standard & Poor's 500 reaching all-time highs, and we've seen the US dollar climb against most of its cross pairs, and now it looks like there's potential for the members of well, there's potential for Fed now to start easing on the quantitative easing. So we've got to take that into effect. As you can see here, the US dollar Swiss franc has rallied over the past week or so, and in doing so breaking a major support and resistance level high here in the shape of this major February retracement level, the 23.6 here. As long as price maintains above this, however, then we should see price continue to the upside. Quick glance at the weekly scene, you can see that the institutional moving average is below price now. Last week's candle closing higher, which is a clear indication of upside favoritism. Good sign that the US dollar is rallying. A good sign of positiveness here for the US dollar, as we are trading above the institutional moving average on our weekly time frame for the first time in as many months. So very, very good sign that. However, if you go back to the daily again, getting a buy signal. We do need to see price maintaining above this 23.6 now, the 97215 mark. You can see prices pulling back on the Asian session. Very bullish engulfing candle yesterday after the news they came out. RMO, MACD all above the zero. However, you can see the MACD has pulled back. You can see the long-term charts over here on the indicator box pretty much blue, so long-term sentiment is looking positive. However, intraday we're seeing mixed signals. Both the moving average and the RMO aren't clearly working with each other, and that's primarily, as we can see, that intraday we're seeing consolidation. So as you can see on the 4-hour chart here, pulling back to this level here. So as it stands at the moment now for US dollar Swiss franc, we're looking at consolidation. As long as that consolidation closes above this level, the 23.6, by the close of play this week, we should be looking for the start of next week for potential bullish engulfing candle. If we do see price failing and closing lower than 23.6, then we should start looking for further negativity on this particular pair. Last pair of the day, the US dollar Japanese yen. Here again, you can see US dollar Japanese yen seeing consolidation on the daily here. Price hasn't really gone anywhere over the past 4 days, and in doing so has formed a top. Still trading above 50% line, which is our monthly February retracement area here. This the US dollar has been on a major positive move to the upside against the yen. However, we saw the news yesterday morning about the Bank of Japan still continue with their policy of quantitative easing, and you could see there was also news out yesterday afternoon that Bernanke and the Fed were looking to potentially start looking at easing on their quantitative easing. So we've seen a change in market sentiment now. We can see that the US dollar has lost strength against the Bank of Japan, or the yen, apologies. And in doing so, you can see that the current daily candle, which has been quite an aggressive one, has now engulfed this entire top range here. So this is a very bearish outlook. And if that continues, then we should be looking potentially back towards this 50% line here, the February retracement level here at the 99.77 as our first target for our intraday trading. Price support and resistance level quite significant, and if we see price failing here and we get a bearish engulfing candle, then ultimately that sentiment starting to look wane to the negative side. If that's the case, then we should be looking to the price support and resistance level here in the shape of the 99.77 as our first target. So on our 4-hour time frame, you can see all the hesitation, the top end here. We had a tweezer top at this price support and resistance level here, and prices actually fell. Long-term sentiment looking positive. However, intraday you can see a lot of selling with sentiment. The R squared here complementing that selling sentiment, and sure enough, you can see quite a drastic fall for price since the open on the Asian session. We've seen 148 pip move to the downside in this case. So very, very aggressive selling on the Asian session. And if it closes lower, then ultimately we should be looking back towards our 50% retracement area here, which is back on our 4-hour institution moving average. So as it stands at the moment now, we should be looking for potential shorting opportunities. There's a lot of news out this afternoon for the US market. So unemployment claims. We've also got flash manufacturing PMI results. We've also got new home sale figures. So there's a lot of news this afternoon that could reflect reflect on the US dollar Japanese yen. So be aware of it. Other than that, guys, that's it. Short and sweet. Apologies for my voice. I've had a chest infection, so if I don't make any sense, I apologize for it. Hopefully by the start of next week, everything should be great. I'm popping pills to try and get rid of it. Other than that, if you are following this particular rule, this particular template, please follow the rules that guide it, and also back it up with sound money management. Very, very important. Keep it simple, guys. We are seeing a lot of news out today, so be aware there might be a lot of volatility out there. The last thing you want to do is trade volatility when it's very speculative, because then you're not really going to be getting any clear signals. Okay, so keep it simple and just keep an eye on the news out today, because there seems to be quite a lot of it. On that, I'll see you first thing tomorrow morning. Until then, you guys trade serenely.